The Bank of England has cut the national interest rate, known as the base rate, from 4.75% to 4.5%. That was expected, but what does it actually mean? Not only for the economy, for the government, but most importantly, for us. Well, our political editor, Andy Bell, is in Westminster for us tonight. Andy, let's start with the government. Will they be happy with this?
Oh, I think so, Dan, because if you're someone with a mortgage or a company that's borrowed money, one of the quickest ways you can feel better is if your monthly interest payments go down. And as a result of this base rate cut today, that is what will happen for an awful lot of people. So the government will be happy with that. As for that bigger ambition that we keep hearing so much about, the quest for growth in the economy, well, that still remains elusive.
This is great for consumers, right? Really good competition and rates are coming down. That's a positive thing.
At this London mortgage brokers, they've been watching lenders cutting their rates for customers in anticipation of today's announcement. And at midday, as expected, it arrived.
Yeah, this is a really encouraging thing for both people that are looking to take out mortgages, so first-time buyers. You know, the reduction in the rate not only means lower monthly repayments, it means they can afford more, and there's an affordability issue, but it's also really positive news for people that have an existing mortgage. For all those people looking to remortgage, you know, the amount they're going to be paying each month is lower going forward than it probably was yesterday.
On a £200,000 mortgage, for instance, today's rate cut means a saving of about £50 a month. But what about savers who can lose out when the rate of return on their savings is cut? The advice for them: shop around.
So we know we're going to be affected mostly if we have a savings account where we have an easy access, instant access. They're going to be affected the most. So I would look at either fixed term options or notice options. So if you can lock your money away for 6 months, a year, I think those would be your better options because there's still great deals on the market at the moment for that.
At the Bank of England, where they made the rate cut decision, they are expecting further cuts, but they're also worried about short-term inflation, and they've just downgraded their forecasts for economic growth because
we live in an uncertain world, and the road ahead will have bumps on it. We expect inflation to increase this year to a peak of about 3.7% before returning to the 2% target. And we will set bank rate to ensure that it does so sustainably. Low and stable inflation is the foundation of a healthy economy, and we will do our job to continue to ensure that.
He is one of those potential bumps in the road. Trump tariffs could slow UK growth. So for now, the hope is making borrowing cheaper might keep the economy moving forward.
Let's pick back up with Andy. So, Andy, I was listening really carefully to that. So, essentially, the Bank of England has cut that base rate of interest, even though they're worried about inflation.
Yes, Dan, normally when inflation's going up, and that's what the Bank of England expects to happen over the short to medium term, you don't cut interest rates because you don't want to make it cheaper to borrow and spend. But the Bank of England, or the Monetary Policy Committee at the Bank of England, seems to have decided that actually the bigger problem at the moment they want to worry about is that lack of growth in the economy. And so the theory is that if you do make it cheaper for people to borrow, spend and invest, then you might get growth going in the economy, and it's worth that risk. It's worth the risk of that short-term rise in inflation. Certainly, that is what the government wants to happen. They want to see growth returning to the economy, and they're hoping that this base rate cut and maybe some more coming down the track will help that happen.
OK. Andy, live in Westminster, thank you very much. That's our political editor tonight.